back to FlexCandle, where we read the candles and flex the moves. I'm Flex, and today we're diving into Bitcoin. We're going to be doing a top-down analysis, starting off from the weekly time frame and working our way all the way down to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's hop into the chart. Currently, it's 1 p.m. Eastern Time Saturday. Tomorrow is a weekly candle close at 8 p.m. Eastern Time. So far, unless we get some movement from this candle here, it's looking bearish at the moment. If we get more downside and we close down here, or we even worse, if we get a red engulfing candle, you know, this could be a double top, this could be tweezer tops up here. So it's very important tomorrow's candle close to see where we end up. Right now it's not looking too good. Things that are, you know, in our favor that's bullish is that we are above the 21-day moving average. That's bullish. The stochastics still look like they need room to keep going, especially after yesterday's episode when I showed you the 2-week that we're on the way up. So unless this rolls over, this needs to continue going up, and then that means that the weekly could continue dragging up here a little bit. Now we have a couple scenarios here. I have this in a falling wedge breaking out to 117, 120. So far we've broken out, I would say, like halfway. My other scenario is this could be a double top here at 104,000, which is why we can't break resistance at 105, or it could be a double top at 110. Another thing is that they could fake out the double top, and this could end up being an inverted head and shoulders. Once this comes down, then we go back up and we head up beyond 110. So we have to keep all those scenarios in mind. Right now I am overall currently bullish on Bitcoin, and I think we would make it at least to 110. From there I would have to reassess. Now we take a look at the daily time frame. We have the daily here and a flag. So far it is following that track. This flag should break out to 111,000. The stochastics are on the way down. They kind of look like they want to curve up. Yesterday when we took a look at the stochastic, you could see a little curve here, but now they faked this out and it's starting to come down. So unless we do a big round curve, it looks like we will drop down, but I think we might end up doing a curve here at some point. Let's see what ends up happening. Now what's bullish here is that we are above the 21-day moving average. The 21-day moving average crossed the 200-day moving average. We're still far away, so I could see a little bit more dumpage, maybe coming down to this wick to about 100,500, or maybe even testing the 21-day moving average at 99,288. I still do remain bullish as well, because we're about to hit a golden cross here in a couple days, maybe within 2 or 3 days. That's when the 50-day moving average crosses the 200-day moving average. That is bullish. Sometimes before the golden cross happens, we end up having a little bit of a dump. So speculation here, can we fall down to the 21-day moving average, now bounce off of it? By that time we have the golden cross, and now all of a sudden we're super bullish, and now we head to 110 and beyond. That's the scenario that I'm more than likely going with at the moment. Now if we head over to the 8-hour chart, we see that the stochastics are rolling over here. This looks kind of like an M pattern. This also right here looks like an M pattern with the stochastics pointing down, and we're below the 21-day moving average. It looks like our next stop is going to be the 50-day moving average at 100,296. We lose that, we could even go test the 80-day moving average at 97,722. So right now the lower time frames look a little bit bearish. We take a look at the 4-hour chart. Same thing, stochastics falling on the way down. I thought this was going to be a double bottom pattern and shoot us out, but now we're dragging too much to the side, and I don't think that that's gonna happen unless we turn around sometime soon. Maybe once the 4-hour stochastics go down and they're on the way up, maybe we do break out, and this double bottom pattern would take us to about 107,500. So let's see what ends up happening. But right now we're going sideways. We are below the 21-day moving average. Something that, just like the 8-hour chart, could this be an M pattern? Could this be an M pattern? And if this is an M pattern, this is probably going to take us at least to this blue line, the 80-day moving average, which is at 100,129. And then taking a look at the 1-hour chart, the stochastics are low. They kind of look like they're about to roll over though. Bearish is that we are below the 21-day moving average, below the 200-day moving average. This looks like a bear flag to me as well. So it looks like we do have some more downside, or we're going to go sideways. What's very important is going to be tomorrow's daily and weekly candle close. So stay tuned for that. All right, guys. So that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.